What's going on, everyone? My name is Jeff, and we are going to talk about confidence and how big and important confidence is to investors. That's going to be the subject of today's video, as the Fed holds rates steady and predicts no increase in 2019. Now guys, the markets were pulled back drastically this morning in anticipation of the Fed's decision, and I think pretty much on any news of a rate increase or a futuristic rate increase in 2019, I think you could have seen 5, maybe 700 more points fall off the Dow Jones, and now it appears that all the indexes are recovering, and even the NASDAQ and S&P were in the green a few minutes ago. I'm a little wound up. I just seen 160 points erased off the Dow in about 10 seconds. It was pretty crazy. And so what this does, guys, in the short term really doesn't mean anything, but there has been a noticeable slowdown in economic growth. I think our first big sign of that was in 2018, when Facebook lost $40 a share on a bad earnings report and has still failed to recover back to their 2017 and 2018 levels. And then, of course, some of the bigger tech giants like Apple, Nvidia, and Amazon, have all seen a huge drop in their market cap. And, of course, earnings growth. The real place that I have noticed a big change from mid-2018 till now is simply in earnings growth. Is that companies are missing on earnings a lot more often. Forward guidance is not being put at nearly the level it was 2 years ago or a year and a half ago. And so it would be almost irresponsible for the Fed to raise rates when economic growth is slowing a bit. Like I've said all along, this is not time to panic. This is not time to sell all your stocks or try to get out of the stock market. Really, it is just a good time to be investing and, building good long-term positions in companies and ETFs that have a legitimate future. So the Federal Reserve left interest rates completely unchanged on Wednesday. This showed little appetite for raising them in the near future. And of course, guys, that is a residual effect from an increased concern about a slowing economic growth. I think this is just a matter of momentum, okay? Of course, the market declined from October to the end of December and even into the first week of January, and has pretty much made a full recovery since. Now we are getting back close to our all-time highs on the indexes. And there is still some general concern that these companies just simply can't grow any more than they are, or their growth rates are slowed way down compared to a year or two ago. They also spoke in their post-meeting statement that growth of an economic activity has slowed from its solid rate in the fourth quarter. Guys, they also mentioned slowdowns in household spending and business fixed investment. So I've even noticed this myself a little bit, where maybe 2 or 3 years ago, I never really set much of a budget. I have been budgeting a lot more and trying to be a lot more efficient with my dollar so I can continue to do all the activities I like to do. I really hate to get back to a big dip like we had in December and have no money on the sidelines to buy stocks. That just kills me. And of course, I was fortunate enough to invest into some of those big dips, but a lot of us weren't that fortunate, and that's kind of what I want to prevent, going forward. And then briefly, just to wrap up, guys, rate increases to the current range of 2.25 to 2.5%. Again, those are just staying steady. And the typical member now expects a single rate increase in the year 2020 and none in 2021. Now, obviously, that forecast can change. It just really all starts and ends with earnings growth in the stock market and companies having the ability to grow and expand. And so this comes as actually a very good set of news. And in my opinion, the door is wide open for investors to continue spending money. So I've got the Dow Jones Industrial Average pulled up, guys, and I was sitting at my computer looking through a couple of my brokerage accounts, and I was kind of anticipating the Fed's response. If we were going to get a huge correction on the Dow and S&P 500, I plan to invest some more money into the markets on a big dip, and we just did not get that. So the indexes were sold off this morning and really continued into mid-afternoon. It looks like we did hit a low here about 11 o'clock a.m. Where the Dow was down almost 1 full percent. And then, of course, it ran into 2 p.m. Eastern time, which is 1 o'clock my time. And the Dow Jones almost went parabolic on the news of the Fed's decision. Basically erasing a 160-point loss. Guys, and has now got itself currently 18 points into the green. Let's go look at the S&P 500. and pretty much the exact same chart pattern on the S&P, guys. Looks like it hit a low of 2,813 points here about 11 o'clock in the morning, and then as the Fed's decision approached, did recover a little bit, and then seen almost a parabolic movement on the news from the Fed. And now the S&P 500 is comfortably in the green, about 8 points. So I'm sure when you guys get a few minutes, you'll be looking through your portfolio, and you will see this big dip early in the day, and then most of your stocks have probably recovered by now, and you're probably even increased from where you landed yesterday. Of course, I try my hardest to defend the Fed's actions and always point out that the reason we've had such a bullish market over the past 10 years is because the Fed does try to do the right thing for investors and the economy, and sometimes it just appears when they do have a rate increase that it's kind of working against investors. But I do try my best to keep optimism flowing. And guys, that's what I was talking about at the start of the video, is investor confidence. It really instills the confidence back into the investor. And just to wrap up, guys, I wanted to get a little screen capture of all three of the indexes trading currently. And as of right now, the NASDAQ is way out in the lead. They have about a 49-point boost from the Fed's decision. So that tells me tech companies are trading up very high right now. At any rate, guys, I just want to emphasize, in the short term, this is not any real big dramatic news. But the fact that the Fed is going to keep interest rates steady and they're going to remain unchanged, I think this gives investors the green light to go ahead and keep investing. Anyways, guys, that's all I got for the video. Drop a comment, share your thoughts with me. I would love to hear it. Please drop a like on this video, as I always appreciate that, and thank you for watching.